In a notable shift reshaping global energy dynamics, European nations are turning from U.S. natural gas supplies toward Canadian energy resources. This change, triggered by events in the northern Black Sea region, marks a crucial turning point in international energy trade. The shift began when Russian sanctions disrupted energy supplies to Europe, creating an immediate crisis. While U.S. LNG shipments initially helped Europe through a difficult winter, this proved temporary as European buyers faced unsustainable U.S. gas prices above market rates. Europe's concerns grew due to volatile U.S. energy policies changing with each administration. This unpredictability made European leaders wary of long-term U.S. energy dependence. The U.S. transformed from a reliable partner to being seen as using energy exports for political leverage. Canada emerged as an attractive alternative with its vast resources and stable political environment. Beyond oil and gas, Canada offers critical minerals like lithium and cobalt, essential for Europe's EV manufacturing goals. This comprehensive portfolio supports Europe's green transition. Canada stands out for its consistent approach to international trade, unlike fluctuating U.S. policies. This stability, combined with environmental commitments, has made Canada crucial to Europe's energy security strategy. The transition shows how reliability and political stability now match resource availability and importance. Europe's move toward Canadian supplies represents a strategic shift prioritizing long-term stability. This change aligns with Europe's push toward renewable energy. Canada's EV critical minerals complement Europe's green ambitions, creating natural market synergy based on shared values and environmental goals. The development affects U.S. energy exports and global markets as Europe diversifies its energy sources. New trade patterns are emerging that could reshape international relationships for years to come. This situation shows how energy security links with political stability and strategic planning, as Europe prioritizes predictable partnerships over volatile relationships. In a significant shift reshaping global energy dynamics, European nations are increasingly turning away from American energy supplies in favor of Canadian resources, marking a dramatic change in international trade relationships. Canada's aggressive transition to clean energy, including solar, wind, and hydroelectric power, has created alignment with European green energy initiatives. This contrasts with America's continued reliance on fossil fuels, making Canada an attractive partner for European nations seeking sustainable solutions. The economic implications are substantial. The European Union, once the largest purchaser of U.S. liquefied natural gas, is now redirecting billions toward Canadian energy sources. Canada's abundant critical minerals for electric vehicle battery production have become crucial in Europe's clean energy transition. This represents a fundamental shift in global energy politics, says energy analyst Maria Henderson. The U.S. has traditionally used energy exports as leverage in international negotiations. With Europe finding an alternative in Canada, America's diplomatic influence is diminishing. A growing trade war between the U.S. and Canada threatens to reshape North American economic relations. Recent U.S. tariffs on Canadian imports have prompted retaliatory measures from Ottawa. The situation has been complicated by the conflict, which has accelerated Europe's search for reliable energy partners. Canada's strategic response includes diversifying energy exports toward Asian markets, particularly China. The Trans Mountain Pipeline expansion signals Canada's commitment to becoming a global energy powerhouse. Meanwhile, U.S. environmental regulations hamper its competitiveness in critical mineral mining. These developments suggest a significant realignment of global energy partnerships, with Canada emerging as a key player while U.S. influence faces challenges. In a significant shift reshaping global energy dynamics, Canada's increasing oil exports to Asian markets, particularly China, Japan, and South Korea, marks a strategic move to diversify beyond U.S. dependency. This development has raised concerns in Washington about America's energy security and economic stability. The stakes are high, with the U.S. importing over 6 million barrels of oil daily, with 67% from Canadian sources. Market analysts warn that disruption to this energy relationship could trigger an economic cascade across the United States. The potential impact on American consumers would be immediate and severe, explains energy economist Dr. Sarah Henderson. We're looking at increased costs across the entire economy, from transportation to food production. U.S. refineries are specifically designed to process Canadian heavy crude, and retooling them for different oil types would require massive investment and time. This leaves American energy infrastructure particularly vulnerable to shifts in Canadian export policies. While U.S. oil companies might benefit from increased domestic shale production, such transitions cannot happen quickly. Environmental concerns and infrastructure limitations present significant hurdles. These developments coincide with global energy market tensions, as Russia and OPEC nations position themselves to capitalize on any disruption in North American energy trade. China's growing partnership with Canada adds another dimension. The Biden administration faces a choice: continue aggressive trade policies toward Canada or pursue a more cooperative approach. With Canadian officials exploring Asian markets, pressure mounts for a diplomatic solution. The U.S. can't afford to treat this as just another trade dispute, warns trade expert Michael Roberts. The economic consequences would affect every sector of the American economy. The energy relationship between the U.S. and Canada stands at a pivotal moment, with repercussions that could reshape North American economic dynamics for decades. Breaking news. Economic tensions escalate as U.S.-Canada trade war threatens multiple industries. In a significant development reshaping North American economic relations, Canada's response to U.S. tariffs is creating ripple effects across the American economy, with far-reaching consequences for everyday Americans. This isn't just about maple syrup anymore, says economic analyst James Morrison. We're looking at a serious threat to manufacturing, energy security, and consumer prices. Canada has launched a counterstrike, implementing a nationwide boycott of American goods. Quebec and Nova Scotia have pulled U.S.-made alcohol from shelves, marking an unprecedented show of economic force. The automotive sector stands to take a heavy hit. General Motors and Ford rely on Canadian raw materials. Industry insiders warn that trade tensions could force price increases affecting consumers. Tech giants Apple and Tesla face potential component cost increases, which could erode their competitive advantage. Smaller manufacturers dependent on Canadian materials might face shutdowns and layoffs. The energy sector is most concerning, notes specialist Sarah Thompson. Canada's potential restriction of oil and electricity exports could drive prices higher. While domestic production could help, environmental regulations make this a long-term solution. Tourism-dependent states like Florida, California, and Texas are bracing for impact as Canadian visitors, who pump billions into the U.S. economy, may vacation elsewhere. This comes as tourism is still recovering from recent global disruptions. The stock market shows signs of nervousness, with investors concerned about deteriorating U.S.-Canada relations. Some analysts compare this to other recent global trade tensions. With inflation already pressuring American households, this trade war threatens to complicate economic recovery efforts. As Washington weighs options, time is running out to find a resolution before impacts become severe. Breaking news from North America reveals a critical shift in the U.S.-Canada relationship, with implications that could reshape global energy markets. Our analysis shows that what began as a trade dispute has evolved into a potential crisis threatening billions in annual revenue and international energy supplies. The situation mirrors energy disruptions in the northern Black Sea region, where conflict has forced Western nations to reevaluate their energy partnerships. Now, a similar dynamic is unfolding in North America, with potentially more far-reaching consequences. This isn't just another trade spat, explains energy analyst David Morrison. We're watching a fundamental transformation of the U.S.-Canada relationship, historically the world's largest bilateral trading partnership. Recent developments show a temporary easing of tensions, with both nations agreeing to a 30-day suspension of controversial tariffs. This diplomatic breather has given Canadian political parties time to strengthen their position. However, experts warn this calm may be deceptive. The core issue remains control over North America's energy future. Canada, leveraging its vast resources and strategic position, is actively diversifying its market opportunities, particularly with European partners. This shift threatens America's energy security and economic stability. What we're seeing is unprecedented, notes trade expert Sarah Reynolds. Canada is positioning itself as a reliable energy partner for Europe, which could permanently alter global energy flow patterns. The stakes extend beyond economic impacts. This situation is evolving into a test case for how developed nations manage resource interdependence in an era of shifting global alliances. The outcome could set precedents for international trade relationships worldwide. Markets are watching closely as both nations navigate this delicate situation. The temporary tariff suspension provides a window for diplomatic resolution, but underlying tensions remain. As one senior official noted, this isn't just about trade numbers, it's about redefining North American energy sovereignty.